Imagine capturing a piece of the AI revolution before it rockets to new heights. With the AI industry set to grow an astonishing 36% annually over the next 8 years, the stakes have never been higher, or the potential gains more exciting. AI and tech are reshaping the world, from the devices in our pockets to the data centers powering entire industries. But for investors, knowing which ETFs can turn this innovation into real returns is the key. So today, we're diving into the best AI and tech ETFs for 2025. Whether you're aiming for steady, balanced growth or ready to ride the wave of rapid, leveraged gains, we'll break down how each ETF fits your investing style. Let's get you ready to capitalize on the AI boom while sidestepping the pitfalls along the way. Hit like, subscribe, and let's dive into these game-changing opportunities together. To anchor our tech-focused investment journey, let's dive into a broad exposure option, the iShares US Technology ETF, or IYW. This fund is designed for anyone looking to invest in the full power of US tech innovation, with just one investment. So, what makes IYW an appealing choice? For starters, it boasts a substantial $18.941 billion in net assets, a solid indicator of investor confidence in this fund's stability and performance. At a market price of around $155, IYW gives you exposure to top-tier technology companies without the need to cherry-pick individual stocks. Let's break down a few key numbers that set IYW apart. This ETF has a competitive year-to-date return of 30%, with an impressive 50% return over the past year and a stellar 190% over 5 years. These aren't just good numbers. They reflect how well U.S. technology has weathered market shifts and continued growing. And over a 10-year stretch, the annual returns only get stronger, showing how IYW captures long-term gains from industry leaders like NVIDIA and Meta platforms. Now, what's inside IYW? This ETF holds 142 companies, almost entirely in the technology sector, with a small allocation to communication services at 9.52% and less than 1% spread across industrials, consumer cyclical, and financial services. Its top holdings read like a who's who of tech heavyweights. Leading the pack is NVIDIA, which makes up a whopping 13.48% of the portfolio, followed by Meta platforms, Broadcom, Alphabet, and Oracle, each providing unique contributions to the fund's growth. These are companies that don't just follow trends, they set them, making IYW a solid foundation for tech-driven growth. And if we look at dividends, while IYW's primary focus isn't income, it still provides a modest dividend yield of 0.28%, with an annual payout of $0.43. It's clear that IYW prioritizes growth potential, so investors looking for capital appreciation may find this appealing. Cost-wise, IYW's expense ratio is 0.39%. Although not the lowest, it's competitive for a tech-focused ETF with consistent returns. This cost factor, combined with its solid growth history, makes IYW attractive to investors who want straightforward tech exposure without the risk of leveraged or niche funds. In a nutshell, IYW offers a balanced approach: high exposure to transformative companies, diversified holdings in the technology sector, and a long track record of growth. For those looking to gain from tech's upward trajectory, IYW provides a reliable, diversified entry into the world of U.S. tech giants. Now, if you're looking for high-stakes growth with a focus on the biggest names in tech and AI, Microsector's FANG Index 3X Leveraged Fund, FNGU, might just be what you're after. FNGU takes an aggressive approach by giving 3 times leverage on a basket of top-tier tech companies, a strategy that allows you to capture amplified gains, but with increased volatility. Let's dive into some numbers. FNGU has a market price of around $470, with a total of $5.33 billion in net assets, reflecting strong investor interest in this high-growth, high-risk ETF. The fund has a year-to-date return of 117% and an incredible 236% return over the past year. But here's the kicker: FNGU has delivered a mind-blowing 1,064% return over the past 5 years. This explosive growth comes from a concentrated portfolio of tech giants and innovators leading the charge in AI and digital transformation. So, what's inside FNGU? With a total of 10 powerhouse holdings, this fund is laser-focused on the biggest names in technology, communication, and consumer-driven innovation. Meta Platforms leads the way with a 12.53% weighting, followed by Tesla, Nvidia, and Advanced Micro Devices. It also includes other giants like Netflix, Apple, Amazon, Snowflake, Microsoft, and Alphabet. Together, these holdings position FNGU to capitalize on cutting-edge advancements in AI, streaming, cloud computing, and e-commerce. It's a dream portfolio for those who want maximum exposure to high-growth sectors. In terms of sector weightings, technology leads the pack at 60.52%, with communication services at 29.61%, and consumer cyclical at 9.87%. This mix ensures FNGU captures growth from multiple angles within the digital economy, from social media to semiconductors to electric vehicles. Let's talk risk. With a high expense ratio of 0.95%, FNGU isn't the cheapest option, but that's expected given its leverage structure. Leverage funds like FNGU are designed for short-term trading or for investors who can closely monitor market conditions. In a bullish tech market, FNGU's leverage gains can be phenomenal, but during downturns, losses can accumulate quickly. This ETF requires a strong stomach for risk, but offers unmatched growth potential if timed right. In summary, FNGU is for those who want to ride the wave of AI and tech innovation at 3 times the power, fully aware of the ups and downs. It's a bold choice, but for aggressive investors ready to go all in on the future of tech, FNGU offers a high-octane, high-reward path. For our third AI-focused ETF, let's explore the Invesco AI and Next-Gen Software ETF, IGPT. If you're looking for a balanced approach to AI with a solid lineup of established tech leaders alongside innovative newcomers, IGPT might be just the ticket. This ETF is designed for investors eager to capitalize on the ongoing software and AI evolution, with a particular focus on companies developing next-gen solutions across various industries. So, what are the numbers telling us? IGPT has $398 million in net assets and is currently trading at a market price of around $46 per share. With a year-to-date return of 20% and a remarkable 51% return over the past year, IGPT has proven to be a strong contender in the AI ETF landscape. Over 5 years, it's gained a solid 49%, reflecting steady long-term growth. With 100 holdings, this fund brings together a broad array of companies at the forefront of AI, heavily weighted in technology, 69.19%, and communication services, 19.10%. A smaller portion is allocated to real estate, healthcare, and industrials, which diversifies its exposure while still keeping AI and software as the focus. This broad sector mix means IGPT can capture growth from AI applications in diverse fields, from medical robotics to cloud computing and even real estate analytics. IGPT's top holdings include household names like Meta Platforms, Advanced Micro Devices, and Alphabet, with Meta and AMD each making up over 8% of the fund. It also includes Nvidia, a cornerstone of AI processing, and Adobe, a leader in creative and digital software. You'll even find medical tech innovators like Intuitive Surgical and Japan's Keyence Corporation, giving IGPT an international edge. This combination of companies positions IGPT to benefit from both hardware advancements and cutting-edge AI-driven applications. IGPT has an expense ratio of 0.58%, which is competitive for an ETF with such specialized holdings. While not as high risk as leveraged funds, IGPT's concentrated tech focus means it can be volatile, especially if the AI or software sectors experience downturns. This ETF is suitable for investors who want strong exposure to AI without the extreme fluctuations of a leveraged fund, offering more stability with an attractive growth profile. Alright, so there you have it. A deep dive into some of the top AI and tech ETFs that could position your portfolio for explosive growth. Each ETF we covered today offers unique ways to benefit from the AI revolution. Whether it's through broad tech exposure, aggressive leveraged plays, or a balanced focus on next-gen software. Remember, investing in ETFs, especially those with a strong tech or leveraged focus, comes with risks, including market volatility and sector-specific downturns. Always consider your own financial situation and consult with a financial advisor if you're unsure about any investment decision. The information provided here is for educational purposes only and is not financial advice. If you found this breakdown helpful, please hit that like button and subscribe for more insights into the ever-evolving world of tech and AI investments. Don't forget to turn on notifications so you never miss an update. And if you have any questions about today's ETFs or want to share your own thoughts on the future of AI, drop a comment below. I'd love to hear from you. Thanks for watching.